Okay, welcome everybody to this evening's ACY Securities webinar, live forex market review. Before we get into it, if you can read through the disclaimer, which is just coming up. Any questions to question box or chat box? If you're on our YouTube live stream, I can't see the chat. So if you want to chat to me, just follow the link that I've given you, and then you can come into the webinar room and ask as many questions as you like. All right, just read through the risk disclaimer before we move along. All right, let's move forward. So if you don't know me, then my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities, and I'm a full-time trader for most of my time when I'm not doing webinars. Trading the forex market, been doing that now for more than 15 years, mentoring clients for more than 10. If you want to contact me, my email is on screen, duncan.cooper@acy.com. So through the week, you can get my analysis at the ACY website. Go to the Market News tab at the YouTube channel, ACY Securities Australia, and most of it will filter through my Twitter and LinkedIn handles too, so you can connect with me if you wish. Those are my handles. As well, we've got our Telegram channel. If you want to get access, just contact Nathan. I'll put his details in the chat in a minute. As well, you can contact him to get access to my chart layouts and templates for MT4, plus any questions about opening an account, all those sorts of things, just contact Nathan. I'll put his details in the chat now. He'll only be happy to help you with your questions. There you go. All right, so let's have a look at the news coming out. Now, tonight for the US, we have core PPI, PPI month on month coming out. Expecting those numbers to uptick. So we'll see what happens at 11:30. This is Queensland time. Tomorrow, the only real item to worry about is the Aussie RBA Governor Lowe speaking. And we have a holiday in Canada and US. Sorry, I thought that was Friday, but it's not. That's coming in on Monday. So maybe a long weekend for many traders. So holiday there on Monday for those guys and girls. All right, so not too much news coming out on Friday that can affect the market, but we certainly have the core US core PPI and PPI data coming out at 11:30. So that is worth knowing what's going on there. Probably won't open a trade ahead of then, but it's worth knowing what levels to watch, where price might spike to. All right, let's bring up the charts. Now, we'll have a look at the dollar index first up. Now, we did actually close above 103.82 yesterday, which is, this is the monthly chart here, this area of resistance here that we were obviously above last year. We've moved back below it for a period of time. Are we starting to want to move back above it? We will have to wait and see. So February is obviously bullish there compared to the month before. We're positive for the month. It would be great if we finished on a very strong note above those highs by the end of the month, giving us every sense that maybe we're going to have a month up in March. All right, so that's the key level to watch at the moment on the dollar index, 103.82. Can we get above that level? And the next level will be that weekly top at 105.69. Can we get above that level long term and change that weekly structure back to up? So it's still got some work to do, but we've actually had a down week and also an up week this week. So we're maybe forming some form of minor higher bottom there, which is potentially positive. All right, so day chart is structurally looking a little bit bullish, getting some support through that area. And we did close above that level of monthly resistance yesterday. Now, it'd be great if we could have a nice candle up today and close it above, and we have every confidence that the US dollar is getting stronger. Give us a clear direction for pairs to the US dollar trade. But this could hold here. It's been You know, we are back below that level at the moment. This has been 2, 4, 6, 8. And this is the 9th trading day where we haven't clearly broken out yet. So quite consolidatory there. All right, S&P 500 is very similar here in its area just here, where it keeps testing the 41.44 level, which is the 7% fib level of this. This is a monthly range. That's a lower top on a monthly chart to a lower bottom on a monthly chart. And this is the whole corrected move back up. Are we topping out here? This is consolidatory like the dollar index. You know, we'd really like to see a move below that low there, would probably then show its hand. At the moment, it's just kind of sticking around these weekly tops. That's a weekly top and that's a weekly top, even though this is a daily chart. So it's just deliberating, are we going to hold it and turn around? All right, so a little bit consolidatory still is the outlook on the indices, or the S&P 500 anyway. Is it topping? We need to wait and see. We need some more information there. And is the dollar index putting in a bottom? All right. So I might just start with the dollar yen because this is at the moment at a critical level of support. Go to your weekly chart. This weekly low here, where we've been moving back up, we're just above that level. So are we breaking above that level to go up to the next critical level of resistance? Next critical level of resistance is at 135.16. You go to your monthly chart, squash it in. It is a monthly high over here. So be aware of what is coming up on the radar. There is a major top there at 135.16. And at the moment, we're trying to keep above this weekly level of old resistance at 133.62. So we're trading at 133.70 at the moment. We've had a couple of bounces there today already. So at the moment, yesterday we traded above it. Are we going to hold above it today to further move up to challenge that monthly level? All right, there are some daily tops here that the market, and a low there that the market may have a bit of a stumble at, 134.498, short of that level. So this daily chart trend is quite clearly up. It is a little bit overextended in the short term. If it's going to continue up, this 4-hour pullback here really needs to hold at 133.62. So this is actually a good level to, if you're long-term bullish on the dollar yen, this is a good level because you really need 133.62. Now that we've moved above it, you want it to hold for a further move higher. So this is a critical level of support or resistance to watch over the next couple of trading days. Does it hold as support to move up? Or do we move back below it and become resistance once more? So at the moment, you can see we've tested it twice, touched it once, all coincides with the central pivot point, which is kind of bullish in that area at the moment. So this area is a very strong area of support intraday at the moment to look for a movement back up with the day chart trend. If we can't hold and we get a very strong break below it, then that's going to be bearish. So that's the line in the sand there for the buyers and the sellers. All right, so you can work out, do you want to trade here? You could be waiting for, you know, break of that trend line to the upside. That would be a trigger. You just have to work out, do you want to trade that pair? This is a very good, possibly a very good level of support for the trading day. All right, let's move left to the, might just go to the euro dollar. All right, nothing going on right this minute. Pound dollar. All right, let's just start with the pound dollar. So a very nice reversal this week. Just want to get rid of that box if I can. Just want to select. All right, it's disappeared now. All right, so the weekly chart. Is it a double top up there forming? I don't really need that on there. I was using it the other day on a video. Are we forming a double top up there on the long term? Here on the weekly chart. What I'm anticipating is that we're having a week up this week, but we've heavily rejected down. All right. These levels are daily levels that I've got drawn in at the moment. We've heavily rejected down and we're just positive for the week. Are we going to have a week down next week? This is just a 1 week up. So we came up to 122.63 weekly, sorry, 122.63 day resistance there. Had a fib drawn across there, which coincides with the 62 level. Nice rejection. We've moved down below 2 levels of what was daily resistance. And the next level, if we're going to continue down, the next level to watch is 119.61 here. And then if we are having a double top up here, we really need to break 118.41. If we get a clear break of 118.41, we might see the floodgates completely open to the downside on this pair. All right, so my bias is to the downside intraday at the moment. 4-hour rally here at the moment. Now, what I'm noticing on the 15-minute chart is that we're at the central pivot point, and 2 tools I'll be watching at the moment for failure would be the central pivot point. We get another test of the central pivot point and then we hold, we may well top out at the central pivot point. See yesterday how we couldn't get to the central pivot point and then we were down all day. We had the poor GDP figures from memory. Now, if we're remaining weak, we won't spend too much time above the central pivot point. So you can be monitoring for a trend line breakthrough here to trade to the downside. Okay, we could go up to the 121 level. You can see once we broke below there yesterday after the news, 121 became resistance here. So watch the central pivot point. That's at 120.69. Does that become resistance for the day for moving down? Or I'll be watching the 121 level. Bearish at the moment, for sure, is the pound dollar. Okay, or I'm going to head over to the Aussie yen and start from that side. Now, I put this out in the Telegram today. Might get rid of a few lines. The weekly trend here is down. We've moved to a lower bottom. This is all corrective at the moment. And we're challenging a minor top here on the weekly. We got an old support low and an old top there. And those levels are, there's the low, 92.59. That high is at 82.81. Okay. And the question is, there's your move down. This is all corrective at the moment. Are we going to move back down this way over time from the 62% area? We try to move above that level on Tuesday. We reversed Wednesday. What's going to happen today? Did have very poor job figures coming out today from Australia. So I was watching 92.81 today, dropped down to the 4-hour chart, went through the 79% fib pattern yesterday in the webinar. And if I draw a fib across that high to low, 79% fib pretty much overlaps with that high. 79% fib 92.77 up to 92.81. That is actually last month's high up here. Okay, so that is going to be a strong level of resistance that the market may want to hold to. Tried to move above and then we sold off. Are we going to come up and test that once more today? And are we going to hold there? That's a good level to watch for reversal. That might be an area where we could get a very significant reversal down for the long term. So it's worth watching for a reversal. All right, so we're climbing back up within that range that I've just drawn in with the fib. Watching the 79% level. Watching that monthly top, last month's top. It's a weekly resistance level where it is last month's candle high, okay? So 92.77 to 81. Now, we might not get there. We've tried to get up there twice today. So we might not get there. We just have to wait and see. We can get up there and then fail. All right, so that is the area I'm watching. for a failure. And if we do fail, I am looking for a long-term move down from this area to challenge this area down here. So this could be a time where we can create a trade that we can position for quite a while if that weekly trend wants to continue to the downside long term. All right, Aussie dollar. Now, let's go to the weekly chart. Question is, are we having a double top forming up here? We are getting quite a lot of support down here on this weekly top, 68.93, and the line below is a daily level. So are we forming a double top up here? Are we failing? There's last year's range. Are we failing at the 62 level for a long-term significant decline down this way? If so, we're going to need to break through this weekly support level, of course. And at the moment, I am seeing some form of support down there. I mean, that could be a left shoulder, head, and a right shoulder forming here. What I am noticing as well is up here, we got up to about 71. What was the exact number? 71.58. But ultimately, we kind of failed at 71. Then we've moved down just a fraction below 69. And then 70 is starting to become resistance. And this daily resistance here, 69.84, has become resistance. So it's a bit consolidatory in here. Can we break down below this weekly level at 68.93? See, the last two trading days have been below, but we can't close below. So, you know, we could just start to get range bound in this area, or we could start to move up. Can we break below support? Can we continue the reversal that we've been seeing from up here? All right. So the 4-hour structure is still down here once we've moved down from Tuesday's CPI data. Whilst we're getting support down here, structurally on the 4-hour, it is still negative. This is just corrective at the moment. So could be watching the 62, the 79 levels. We might come back up for another test of 69.84 to fail. Doesn't like it above 69.84, and he doesn't like it below 68.93. So it's about a 100 pip range there where we're bouncing around between. You could be actually between maybe both sides of this market at the moment, but I'd be trading the downside as we've had this significant reversal. So I'd be looking for opportunities to sell a rally. All right, today we can definitely get up today back up to 69.84, where we've been finding that daily low there. So the 79% level up there is at 69.93. We could definitely get up there today if the news comes out very US dollar negative. All right. At the moment, it is hanging around this intraday area where the market went berserk when the CPI data came out. So this area here, see how we kind of decided to move below there yesterday? That's exactly where we're sticking at right now. So you can just be monitoring for a trend line break at the moment. If you want to get short, we could be failing from this area here across. All right. Can we start to break back below the central pivot today? Okay. Be very aware of weekly support 68.93 and daily support 68.72. Support's definitely coming in down there. So you want to be, if you're going to trade a breakdown through here today, you've got to be at break even by you get down to these levels and manage it. Okay. Although for me saying on the Aussie, can we also say that structure is range now on the daily? Yeah, well, I just said it's getting a little bit consolidatory. So yeah, on the daily, there is some form of a range forming there. You know, wherever you want to draw it, you could be drawing it from. There's definitely a range bound environment forming. Could be from up there to kind of like there. Yeah, it's getting range bound. I think there's a bit more of a downside bias, but there's definitely getting range bound. It's definitely consolidating. That's why I was saying you could be buying down here to trade up. You could be selling at the top to trade down. But with that strong failure up here with the potential weekly double top, my bias would be to the downside. My bias would be to try to create a trade to the downside from higher up in a perfect world. All right, so that's why I was looking at this area up here. If we can get up there today with some maybe negative US dollar news. But this may not get up there. This may be just starting to roll over there. What's the Aussie yen doing again? Aussie yen. Don't know whether I can get up there, but it's just trying to tick up 1 pip at a time, okay? All right, euro yen. Now, this is very similar to the Aussie yen. Weekly structure here is lower top, lower bottom. Is this going to make another lower top? Now, at the moment, I'm not trading this pair. I'm on the fence. I don't really want to be buying where it is to the day chart because it's just had its upward move. So even if this is going to continue up, it's highly likely that it will have a pullback before having another impulsive move up. All right, it's very much overextended to the upside. So this is not where I want to buy if it is going to continue up. Now, fib drawn from high to low of that weekly range, I can see we're kind of sitting at the 62 level. So that obviously catches my eye. The other thing that catches my eye is this imbalance that we're filling. This imbalance here that got formed. We've almost got to the top of the imbalance there. So this upward move here could just be price action coming up to fill the orders that need to be filled in here. All right. So what I'm watching for at the moment is just sitting on the sidelines, see this obvious area of resistance through here. That high there is at 142.85. The weekly resistance level that we have been holding against until most recently could be now, can we move back below that level? All right, so there's an area there that I'd like to see price move back below. So if price can move back below 42.85, 42.55, that top, that low, to me that's negative. If that very bullish upward move we've had this week needs to hold really above that level if the buyers are in command. I don't know whether they can. If we start to move below, I'll be looking for a short. I'm not seeing a short yet, so I'm just waiting to see if we can start to move below. That's 42.85 level is last month's high. All right, like it's very similar to the Aussie yen, where we tried to get above last month's high yesterday and couldn't, and we fell back below it. So, I've given you a lesson on how markets react around the highs and lows of the month. Often we will get above and then we will completely fail. All right, so I am watching for a failure here. Can we move back below? Perfect price action structure to form now would be for this to move back below that monthly top, 142.85, come back up to retest and hold. And then you look for an opportunity to trade down. All right. Now, if you want to be aggressive, we are at the 62 level. You could be selling at 62 with a stop 100 pips above. That's a little bit more aggressive. I'm just waiting for the price action just to start to show its hand here on the 4-hour chart. Can we maybe see a 4-hour downtrend appear? Do we see a rally back up to test that high and fail? All right, so just sitting on my hands waiting. I know it's a very good level for the market to fail at, but it's not failing yet. All right, to the euro dollar. And there's last year's range. I keep discussing this because I might have somebody on that hasn't been in before and I might be showing them something of major interest. That's last year's trading range. Failed up here at that old weekly top, 110.18, so pretty much the 110 handle. And a very massive rejection down last week. This could be we've actually had a down week and an up week this week. And if we have a week down next week, that's going to be a little bit of a lower top on the weekly chart, which is really going to start to set that structure to bearish there on the weekly. So, the pound's had a week up, but can't hold its gains. We're just holding its gains at the moment on the euro, but are we just having one little blip up, false breaking last week's high, to continue down? And looking at a long term, that's the candle for last year. Is this the high of this year's candle to form a complete candle down the chart for this year? All right, that's why I'm being focused on having the fib drawn across the yearly range. Is often the high of the year can come in at the 79% or the 62% area of the candle range of the previous year. So if that's what's happening right now, you need to get short, because we could be getting down to maybe the 90 level at some point later in the year. Wouldn't it be great to be short now, trading down to the 90 level? All right, so I don't know whether we can get down there long term, but I can see where we're failing at the moment within the structure of last year. So at the moment, very heavy rejecting last week's high. Believe maybe what you're saying, but we're just in February. Yes, we're just in February, but what happens if the yearly high formed in January and we're going to trade down all year? Wouldn't you want to get short now for the potential of that move down all year? I would. All right. Now at the moment, a little bit like the Aussie dollar, it's a bit range bound in here at the moment. Take that line off. The upward move this week got capped at this weekly top over here at 107.87, and day support here 106.69. We're kind of trapped between those two levels at the moment. We could be actually holding here to move back up to revisit 107.87, depending on what the news does today. But my bias is still to the downside. I'm feeling like we've just had to the 4-hour chart. There's last week's high point. We just got above last week's high point, which coincided with 4-hour resistance through here. My lesson on price failing at the highs and lows of the week. Well, there was a prime example, and it all lined up with some old 4-hour lows. And we've actually false broke last week's low here to trade up, then false break last week's high and traded all the way back down to trade below last week's low. All right, so that's how important the highs and lows of the week are. We found support and resistance at both ends of last week. Now, at the moment, as we break it down to the 4-hour chart, what we are seeing is, the US dollar news could drive this up to a 62 level or a 79 level. Could even get back up to 107.87 if it really wants to. But what it's doing right now ahead of the news, it's just sitting underneath this area of 4-hour resistance, 107.06. So it's just starting to maybe want to hold now at the 107 level. We're kind of getting capped up here at the 108 level. Maybe now we're starting to get capped at the 107 level. All right. And it is just starting to break down. Now you need to make a decision if you want to trade ahead of the news coming out later, but we're getting a trend line break here. All right, if we can start to move below the central pivot point in the figure, we could be moving further down as we move down yesterday. There's the CPI lows that got formed. There's the 4-hour resistance. And we're just moving back below the area. So any rally today is kind of getting capped from the low area of the CPI data on Tuesday. So it's looking to the downside here. Just how do you want to trade it? The news from the US could spike this up. I would be watching up to the 79% level, 107.73 and 107.87 later in the night if we get some US dollar weakness coming out. But at the moment, definitely over the last, since we've had the job figures in February, the news from the US has actually been positive. Before then, it kept being negative. So suddenly we're on a warm winning streak on the news front from the US. So maybe the table has turned on the news front. So, if the news comes out today very US dollar positive, you won't be able to get short because it'll just drop. So it'll be very difficult to take a short position if you're not already short. So you need to work out what you want to do long term. Do you want to establish a short position ahead of the news or wait till after the news? All right, pound yen. Discuss this level on Tuesday. This is definitely range bound. And the range, the range trade, let's say the range is from that high to that low. Just draw a fib. I want to have the fib drawn the other way at the moment because potentially we're failing at the top to move down. So I'm going to draw the fib that way because I want the 79% level at the top of the tool. Is trading at the top of the range, you're selling at the top, stop at the 127R, looking for this to trade down to support. Now you could be waiting for a complete understanding that this has failed before you want to engage, but if you want to engage, you want to get in by the 79% level to trade down so you can maximize your risk reward. All right. So while you're failing here, so simply stay in a range to move down. It does have a slight upward bias within the range, but if we do fail at the top of the range, then potentially this could break down its structure back to slightly down to move to the bottom of the range. All right, that pair at the moment is very range bound, so you have to trade it like it's in a range. This is not where you want to buy because you're buying close to resistance at that top of the range. All right, yes, this could blow north through there, but it's just not the place that you want to be a buyer at. You should have been already bought and holding a position if you think this is going to break north. This is not where you want to start to establish a position. This is where you should be taking profits at the moment or tightening your stop or looking to go short. So very negative yesterday. It's not quite, put a fib across there. The 79% level overlaps with the high. Very similar to the Aussie yen I was showing you. So the clear opportunity to trade if we move up is to sell here at the top of the range. All right, you can monitor that. And Edwin and I saw you on there. I don't know whether you're looking to trade that. I know you trade the pound crosses, but can we move through 61.80 or is 61.80 going to hold? That's the level to watch. All right, cover the pound. Pound is just trying to fail at the central pivot point there with it maybe giving you a trend line break. So yesterday we couldn't get above the central pivot point. My lesson on pivots is when we can't get above the central pivot point the day before, often we will only trade up to or close to the central pivot point the next day and then have a day down. So is that what is happening right now? All right, New Zealand yen, not much is changing here. It's very range bound. The area I'm watching is up there, 84.66 to 84.91. Major daily, weekly resistance zone up there. All right, that's where I'll be looking for a short. And down here would be where I'd be looking for a long. But we're nowhere near there. So, some pairs, when they're very range bound, I'm simply waiting for the outskirts. So we're waiting for the outskirts at the moment at the top of that range to get touched. Now, sometimes when I'm waiting for an area, price just does not get there. It doesn't quite do what I want. And, so I don't engage. All right. I have a definite idea where I want price to get to before I'm going to engage. So it hasn't got quite there yet. So I'm just waiting. All right, New Zealand dollar, put this out on the Telegram today. Watching 6,300 to 6,304 for failure. We're not too far away from the area at the moment, but we're clearly holding there. So what is going on? Like the yearly range, like I was saying on the euro dollar, this January high here, which is kind of a double top, hitting monthly resistance here. Yeah, I don't know what price will do for the next 11 months of the year, or 10 months. We're almost 2 months down. That was last year's candle. Is this the high of the year? But failing at 62% of last year's range to put a candle in like so for the rest of the year. If it's going to do that, this is when you want to get short. All right. That's what I think is happening at the moment, is we're putting in the yearly high up here. Now, I can be proved, if we go above that high, I'll be proved wrong. All right, at the moment, though, we're trading down. All right. Now, on the day chart, we've had this trade down from that potential weekly double top. It, like a lot of these pairs at the moment, it's very consolidatory over the last week. All right, it's forming a lower top here. We did move down below. A lot of these candles, the reason why I picked 6304 today for resistance was all these candles were closing above 6304 and we traded below yesterday. So then in my mind, support becomes resistance. There's your support line. 6304 becomes resistance now. And the figures there at 63. So 6,300 to 6,304 is my area for failure today on the New Zealand dollar. Also lines up with that CPI low that formed intraday over here as well. So it's just starting to break down to the downside. So you need to make a decision. Do you want to trade to the downside? Just put your stop above the area here. And at the moment, back to the daily, my target would be targeting monthly support, 6204 from over here. Weekly support there, 6191. That's an area where if it can't break, you need to take profits. But if we break through there, we could be coming all the way down to last year's low. All right, so if you can get short before the break, and we break, then it's happy days. You're just managing your stop as price keeps moving down. All right. All right, so you just need to make a decision. Are we putting the day's high here at the moment? Or a move down? Playing at 6,300 to 6,304 daily resistance, okay? So we'll drop back to the Aussie yen. Don't know whether the Aussie yen might just spike up there when the news comes out, but at the moment it can't get there. All right, just cover the New Zealand dollar. There we are. Dollar CAD, another pair, very range bound. This was what I wrote on my chart Tuesday. Could we get down to day support and reverse? We got fractionally short, and then we've popped it. We're in the middle of the range. It's not very attractive at the moment, dollar Canadian. You need to trade the outskirts. You need to trade at day support or day resistance. Day support's at 132.62. You've missed that area now. All right, we didn't quite get down there. We false broke last month's low. All right, so now I will be watching what can happen at the top of the range. Now we could come back down to here at the moment. So I'd still watch 132.62 for a buy opportunity, or I will be watching 134.71 for a sell opportunity. All right, these are the outskirts. If it's in a range, you've got to trade the outskirts. We're in the middle of the range. It's in no man's land at the moment. Once it's in the middle, it can go up or down. All right, that's the danger zone of the range. So just monitor the outskirts. 132.62 is the bottom area. 134.71 is the top area. Okay. All right, for the dollar yen. Now, I said watch for support here. Looks like a bit of US dollar strength coming in. It wants to hold above 133.62. As we've just been watching the New Zealand dollar just starting to drift down, the pound dollar starting to drift down. The correlation of the US dollar is there. US dollar is getting stronger. All right, let's just jump into gold. Now, as I said on Tuesday, gold is being very weak in its correlation to the US dollar getting stronger. You know, pairs to the US dollar moving down, they're a bit consolidatory, but this is a lot stronger in its decline than the pairs to the US dollar over last week. So I think maybe we're putting in a significant top up here. All right, we could, depending on what the news brings over the next fortnight, see some kind of reaction back up to 1890 or 1920 to put in a lower top there on the weekly chart if it wants to. But at the moment, it's clear downtrend. We've broken below a daily level of support here. So if you're not trading this at the moment, your level to watch is this area here. Broken resistance, sorry, broken support becomes resistance here at 1860.05. That will be a selling level if price can move back to that level. And I can just see here, see yesterday, see how that level was resistance. So we might not be able to get there now. You just be monitoring the fib range on the 4-hour chart. Watch the 62, the 79 today. 79 would be the better level. That's coincides with last week's low. So that 1853 approximate level, last week's low at 1852. That would be a good level to watch for an intraday pullback too, when the news comes out, or then a continuation pattern down on the 4-hour chart. All right, last month's low we are heading towards, so we might see a little bit of support there maybe. But it's clear downtrend there at the moment on gold. Not too many buyers. All these imbalances that we had formed, there's a bit of one in there. Then if I join them together, there's two imbalances joined together there. There's one there, and then there's another one. So joining both together, we did fill some of it. So at the moment, that imbalance is now to the high of that candle to the right. There. All right. So there's a couple of imbalances that the market just does not want to fill. So that is very negative at the moment. The fact that it hasn't wanted to go back and fill those areas. Very negative. All right. Any questions? So we do have the US PPI data coming out. Could get volatile then, especially if it doesn't come on print or it comes out better. Yeah, does it come out better than expected, which would be obviously US dollar strength. So 11:30 p.m. Queensland time here. The early in the week, let's just go back to the CPI data. Pretty much came out in print. The year on year was higher than expected, but it still wasn't. It was 0.1 decline from the month before. So not too much deflation going on there. 0.1% deflation over the year figure. All right, so it wouldn't take too much, would it, for that to start to uptick? When you're raising interest rates every month and all it's managing to do at the moment is pull it down 0.1%, that doesn't seem to me to have inflation under control. All right, so it'll be interesting to see what comes on the PPI data this evening. Does that become a much more positive figure than expected? Well, it could be a negative figure, obviously, but does it continue what is starting to happen is the US dollar news is starting to print positive. Yeah. Yesterday we had good retail sales. Empire State Manufacturing Index improved quite significantly still negative, but they're expecting minus 18.2 and it was minus 5.8. And then retail sales was 1.1% better and 1.4% better on the core. So that doesn't, retail sales, that doesn't tell me that the economy is slowing down at the moment if retail sales are improving. Interest rates are going up to try to curb inflation, but retail sales are still growing. Doesn't seem to be stopping spending, does it? If they're not stopping spending, I don't know how they can curb inflation. All right, so that's what's coming up. So just be aware, I'm not going to do anything until after the release tonight, but after that, I've given you the levels I'm watching and we'll see what comes around. All right, any final questions before I leave you next week? Just to give you a heads up. Next week, Tuesday, live market analysis. So next Tuesday is here, the 28th. Let me just refresh the page. Sometimes when I refresh it, then it doesn't want to refresh. And then, all right, that's tonight. Tuesday, live market analysis, 21st, 22nd. I'm going to take you through the double tops, double bottom pattern. Got quite a number of weekly ones forming at the moment. Potentially, like on the pound, New Zealand dollar, Aussie dollar, can we break their lows to really start to see those patterns form? So I'll take you through the pattern, what to look for, how you come up with targets. If you haven't attended that before, it's well worth watching. A number of patterns potentially forming at the moment. All right, that's what's coming up. Just go over to the webinar page and register your interest if you want to join me. Other than that, I think I'll bid you good night. Have a great weekend. Hopefully where you are, the weather's great. Where I am, the weather's very good at the moment. So might be down the beach on the weekend. And I am going to a concert on Sunday. Going to go and see Ed Sheeran at Brisbane. So if you like Ed Sheeran, you can think about me. Sunday night. Taking my daughter. All right, with that in mind, have a great weekend. Edwin, I know you're in the UK and Ed Sheeran's from the UK. I don't know whether you like Ed Sheeran, but there we go. He's over here in Australia at the moment. We'll be seeing him on Sunday, Brisbane. All right, everybody, have a great weekend. And thanks, everybody. Look forward to seeing you next time.